see how the, what we're doing fits in the scheme of things, and then we'll get to the specifics. So, on the accounting cycle, here's the way it works, and I'll show you what we're going to add to it. Okay, so for the accounting cycle, we normally start with the business transaction. You start with the business transaction. That produces a source document. You then journalize that. Okay. Then you post the ledger. Then you do the unadjusted trial balance. Okay, and of course, all that means is the first thing you do at the end of an accounting period is you take the ending balance of all your ledger accounts and verify the debits equal to credits. Okay, and if they equal, you have a lot of assurances that everything was done right. If they don't equal, now's the time to find an error before you go on. Then you do the adjustments. This is what we did last chapter. And of course, you journalize and post to the ledger. Then you do the adjusted trial balance. And of course, these are all current accounts. So with these accounts, what you do is you do another trial balance, the adjusted trial balance. I'm sorry, this is where you do the financial statements. Okay. Now, a couple things. What we're going to do is all of this will be done on something called the worksheet, and this is where we'll start later today. Okay, so all of this is done on the worksheet. Okay, so it's all done on the worksheet. The other thing that we're going to do is we're going to do the closing. And what the closing does is it transfers revenue, expense, and withdrawals. And drawing is a name for withdrawals, right? All of these are transferred to the capital account. So this is the other thing that we'll get into in this chapter, okay? And this is also where we would have done the reversing, but we're not going to do the reversing, okay? Let me make sure that camera's lined up. So, again, let's go through here. All right, all that's on the screen. All right. So again, what we're going to add today now is we're going to do the worksheet. And the worksheet is where you do the unadjusted trial balance, the adjustments, the adjusted trial balance, and the financial statements. And later on in this chapter, we'll do the closing. And what the closing does is it transfers the revenue, the expenses, and withdrawals to the capital account, because these are called temporary accounts. And the reason they're temporary is because they only have an account, they only have a balance temporarily. At the end of every accounting period, they're transferred to the capital account. And you guys, can you picture a statement of owner's equity in your mind's eye? This statement of owner's equity does this also. Okay? Except the statement of owner's equity does it in the financial statements. This does it in the journals and the ledgers. Okay? All right. So, any questions, comments at this point in time? So let's go ahead, and I think the best thing to do on this thing is it's more a matter of practice than anything. So let me hand out a worksheet here. Steve, would you mind, how about this? Steve, would you like to join Chloe? Does that sound good? Here you are. Okay. Arthur, here you go. Arthur, mind pronouncing your name right? All right, okay. Here you guys, you want to be a team? All right. Want to be a team? Okay. Let me work this way. You guys want to be a team? Okay. Here, you guys want to be a team? Sure. Would you like to turn around and be a team? Oh, you, all right, here you are. Sure. So, let's see, how are we doing? You guys want to be a team? Sure. All right? Yeah. You guys want to be a team? Sure. All right. Let's see, what do we got? You want to be a team? You guys are a team. You guys are a team, right? Yeah. And then you guys are a team. You guys want to be a team, and I'm just choosing people that are close to each other. Now, let's see, how are we doing here? You guys, right? All right, what do we got? You guys want to be a team? Sure? All right, now. You guys are you okay with it? Okay, so and just make sure you communicate, okay? Because sometimes it's hard to do that. Okay? All right, let me get some more of these. And all I did was just choose people that are close to each other. All right, let's see. How are we doing here? Oh, here you go. You guys want to be a team? You guys want to be a team? There you are. All right, everybody got a team member. So what we're going to do is we're going to do this is what's called a worksheet. Here you go. All right, everybody got a worksheet and a team member? All right. Now, let's do this. Here's the adjustments. Let me put them on the board here. So what happens on this thing is prepaid insurance. These are the adjustments. All right, how's everybody doing? Prepaid adjustments. So this is adjustments, prepaid insurance. That decreased by 1. So I'll put a -1. Okay. Supplies ended at 1. Okay. Depreciation was 1. And unearned revenue decreased by 2. So these are the adjustments. Oh, and wages. Wages was 1. Okay? So let's take a look at this. We got prepaid insurance went down by 1, supplies ended at 1, depreciation was 1, unearned revenue was 2. Okay, wages was 1. Okay, all right, does that sound good? So let me put this up here on the board. Now, who came in? Here you are. Would you like to turn around and join these guys behind you? Okay. Actually, I should have just. All right, everybody else doing good? Who else came in late? Need to get lined up with a partner? Okay. All right. Let me put this on the board. So let's take a minute and get familiar with what we're talking about here. I'm going to turn that camera around. Sarah, I'm going to step past you here. Okay. All right. Oh, the screens are down. All right. So let me get you familiar with this. I'm going to turn off the light so it's easier to read.
What page is this on?
I'll just give it to you. Okay. All right. Okay. All right. So let's go ahead and just kind of go over this. All right. See how this works. There we go. Now, what to do with this? All right. Make that look bigger. I got to turn it off and put it back on because sometimes when the zoom hangs up, you got to reset it. Okay. so this is the worksheet. Let me give you an introduction. So we're going to put all the accounts here and their ending balance here. And of course, that's the trial balance. This is where you do the trial balance. And we'll verify the debits equal to credits. Here's where we'll put the adjustments. And I put the adjustments on the board. This is where we calculate them. Then we're going to combine the adjustments with the trial balance. That'll give us the adjusted trial balance. All these accounts will be updated. Then we're going to take the revenue and expense accounts and put them to the income statement and calculate the net income. And everything that didn't go to the income statement goes to the balance sheet. Okay, so that's, and this is the worksheet. Everything's in one place. It pulls down the errors. It's easy to fix an error. Of course, you set it up in an Excel spreadsheet. So the first time you set it up, the second time you just plug in the new numbers. Okay? Questions? All right, so let's get familiar with the problem. So what happens here is cash has a debit of 4. Accounts receivable, I'm just put A/R to move along. It has a debit of 7. Okay? Prepaid insurance.
We're just copying what you're doing?
Yes. Yeah. By the way, could you raise your hand, and because you kind of catch me mid-sentence? And what I'd like to do is familiarize you with the problem, because if you're familiar with it, it really works better. Okay? All right, 2. Supplies has a debit of 4. Office equipment. And I'm going to write EQ for equipment. All right. Lori, how you doing? Have you got a question?
Did you say what page it's on?
No, I'm giving to you. It is in the book. Yeah, thanks. Anybody else got a question? You doing good? All right, yeah, David?
Are those meant to be indented in all order?
No, they're just in the column. And I just was, all right. Okay. All right. Office equipment has 8. Accumulated depreciation office equipment. And I'm going to put EQ for equipment. Now it has a credit of 1, so don't forget it's a contra asset. And as such, it will have a credit balance. And I can make this bigger, make it easier to read. Okay. Accounts payable, I'm going to put A/P. Now it has a credit of 4, so liability. Unearned revenue. It has a credit of 3. Now that's a liability. That's where you get a prepayment, right? Okay. Then we have T. Julius Capital. That's the capital account. That has a credit of 12. T. Julie withdrawals. Now it has a debit of 6. Service revenue, which is the revenue account. Now it has a credit of 23. Utilities expense. It has a debit of 2. And wages expense. I'm going to ESP. It has a debit of 10. So what we're going to do is we're going to do the trial balance, right? So we add up all our debits. Unless I forgot to write something down, they should equal 43, double line. Add up all our credits, they should also equal 43. Now, we have a lot of assurances that everything was done correctly, and so now we're going on and do our adjustments. And of course, here's where we are. In the, we just wrote down the ending balance in our ledger. We just did the unadjusted trial balance. And now we're going to do the adjustments. Okay? Later on, we'll journalize and post, but right now. Okay? So the adjustments, here they are. Prepaid insurance, there's 1 was used. Supplies ended at 1. Depreciation was 1. Unearned revenue was 2. Went down by 2. Wages was 1. Okay? All right. Everybody's got a partner and all that. Kia, you accumulate you joined somebody, right? Or did you come in late?
No.
But you got a partner,
Yeah.
oh, that's right, never mind, okay. Okay, I just want to make sure you had a partner. All right, here's the deal. Prepaid insurance, now it went down by one, so here's prepaid insurance, we're gonna go over here, we're gonna credit it by one, right? And all the accounts that had a balance were here, well, insurance expense didn't have a balance, so we left it out, and we're gonna add it here. That will be a debit, and it doesn't expense. That will be a debit of one, okay? Now, let me kind of put this up here so it fits good there. Now, often what you'll see is that all the accounts will be included here, even those with a zero balance. You'll see it done that way. You'll also see it done this way, where only the accounts with a balance are here, and then if you need to establish a balance, you put it down here. In this case, that's the way it worked, okay? The next one is supplies ended at 1. Well, supplies, if they're at 4 and they ended at 1, we got it credited by 3, right? Is everybody see where I'm getting that? Okay. And then supplies expense, it had a zero balance originally, so we didn't include it. Now we've got to include it down here. That will be a debit of 3. Now what I'm going to do is I'm going to identify this pair with the letter A, and I'm going to identify this pair with the letter A. I'm going to identify this pair with the letter B and this pair with the letter B. So then, when I journalize that, right here, it's easy to see which are paired. Now in this case, I'll bear with you, Sarah, and thanks for raising your hand. So in this case, what happens on this thing is, I'm going to identify them as a pair. Now in this case, there'll be relatively few numbers, so it'll be easy to work with. It's kind of unnecessary. But on a real set of books, you can have a bunch of numbers. And it's so much easier to match them up this way. Sarah, thanks for waiting.
Sorry.
No problem.
The A and the B, can they just go in the column to the left, right there?
No, I just put them,
Those little tiny.
they sure could. Yeah, they
And
sure
then
could.
My other question is it always going to be small numbers, or realistically, are they going to be like?
They could be really big numbers. In a big company, billions. Okay, and we're just using these. Now, these numbers aren't realistic. They're just numbers that are easy to work with. And it's easy to see what's going on with numbers like this. If you have 4 and 5 digit numbers, it's just hard to see what's going on. But yeah, this is just pure illustration. All right. The next one now, depreciation is 1. And this is an easy one to kind of make an error on. So, don't forget, we want to put the accumulated depreciation as a credit. Of course, that'll be the letter C. So don't forget, often people credit office equipment. But don't forget, because it's depreciation, it goes in the contra asset. Down here we have depreciation expense. And write EXP for expense. That will be a debit of 1. Okay. The next one up here, unearned revenue decreased by 2. So in that case, then we're going to go up here to unearned revenue, and we're going to debit it for 2 because it has a credit balance, so it gets debited, and we'll make that D. Okay. And then service revenue gets credited for 2. And we'll make that D. In this case, both of them had a balance, so both of them showed up here. Does that make sense? All right. Now the next one then is wages are 1. So in this case, here we have wages expense. We're going to debit it for 1, and that will bring this up to E. And wages payable had a 0 balance, so now we need to add it down here. And I'm going to write PAY for payable. That will be a credit of 1, and that will be the letter E. Now, as we go along, we always total our debits and credits. So this totals 8, this totals 8, it's a check. Does that make sense? Now, the next thing I'm going to do is I'm going to do my unadjusted trial balance. So 4 didn't change, so it just comes across. Prepaid insurance, or no, accounts receivable didn't change either. Prepaid insurance started 2, went down by 1, so it has a balance of 1. Supplies started 4, went down by 3, it has a balance of 1. Office equipment didn't change. Accumulated depreciation had a $1 credit balance, was increased by 1, so now it's up to 2, and that's a credit. Accounts payable didn't change. Unearned revenue started 3, went down by 2, so now it's 1, and it's a credit. Capital didn't change. Withdrawals didn't change. Service revenue is up to 25, because it was 23. We earned 2, now it's up to 25. Utilities expense didn't change, so it's a debit of 2. Wages was 10, went up by 1, so now it's a debit of 11. Insurance expense was 1. Supplies expense is 3. Depreciation expense is 1. Wages payable is a credit of 1. And that would have been an easy one to put in the debit column. Add up all my debits, they equal 45. My credits equal 45. Okay, does that sound about right? Everybody's doing good with that? Now, the next, yeah. Katrina?
Why is it that the accumulated depreciation is 2, then the depreciation expense is only 1?
Because the other one came from a previous period. So in a previous period, we had a depreciation expense of 1 also. So that established, so on the previous period, we debited depreciation expense for 1, credited accumulated depreciation. That's where this was, right?
Okay.
Now, we've incurred another one for a total of 2. So on the balance sheet, and balance sheet, let me know, this is kind of hard to see verbally, you let me know because I'll be glad to write it out, but be sure to make sure. Now on the balance sheet, we'll have office equipment 8, accumulated depreciation 2, with a book value of 6. Okay? You should, yeah, hey, thanks for raising your hand, be sure to ask the question.
We're wondering about the depreciation.
And actually, let me be with you in a second. Katrina, I'd like to check, I just want to make sure I got everything done here. Katrina, does that make sense now?
So the first credit to accumulated depreciation, it's not in expense.
Accumulated depreciation is a contra asset. Let me take a minute and just do this, and I've never seen it where one person has a question. Let me show you here. The way this works is, don't forget, with supplies and with insurance, we credited the account, right? The trouble is, once we then posted and journalized it, it disappeared. Depreciation works differently because it's an estimation. Now, with supplies and insurance, so insurance, passage of time, supplies, you do an inventory, but depreciation, you estimate. Does that make sense?
Yeah.
And because it's an estimation, you don't credit the account, you credit the contra account. It just is part of full disclosure. And thanks for your question, and somebody's very thankful you asked. How are you doing now? You want more of an explanation? You're doing good. All right, thanks. Yeah.
Just wondering, when you have the depreciation of 1, it is put under the accumulated depreciation column for adjustments because.
I'll show you. Let me, here's the deal. And I'm going, okay, yeah, you guys, you got a question, be sure to ask me. Okay, here's the deal. So you have assets equals liability plus owner's equity, right? Now, in this case, it's office equipment is the asset, and it has a debit balance of 8. At the start of the period, you have accumulated depreciation, office equipment. It had a credit balance of 1, and at the start of the period, depreciation expense, all right, EXP, had 0. And the reason it had 0 is because at the end of last accounting period, we emptied it into the capital account as part of closing. So the expenses were empty. Now, in this accounting period, they have another 1. So now this increases by 1. And this, so now we have a balance of 1 and we have a balance of 2. This is a permanent account, it's a contra asset account, and it keeps increasing every accounting period. Doing good? Okay, all right, good. Questions, comments? All right. And again, it's because, and the reason you do it this way, it works differently than supplies or insurance, because with supplies and insurance, when you journalize and post it, it disappears. It's hard to see what happened. But because you had to estimate depreciation, and you won't know how much depreciation occurred until you sell your asset, but at the end of the accounting period, you estimate it, and part of estimation is full disclosure. Okay, because it's an estimation requires full disclosure, that's why you put it in its own account so it's easy to see. Okay? You doing good? All right, and these are good questions. Any other questions? All right. Let me do this. Let's go ahead and go on to the next set. So now, and you know what? We have done, let's do this. I think we've done enough work for a moment. Let's go ahead and practice this before we add another step, okay? Let's go ahead and practice this. And what I'll do is let me hand out this in-class exercise. We'll go ahead and practice it. Can I give you that for your group? All right. Here you guys go. Okay, sure. Here you are. Okay, Chloe, can I hand you this? There you are. In fact, could you, yeah, and those guys have one. Here you go. Okay. All right, here you are. Now, I'm going to go down and sit. Here you guys go. All right, here you guys go. Here you go. Do you guys have? All right. There you are. Can I give you this? I'll get you started. Sure. All right. You guys are working out okay? You're not? All right. Sounds good. You guys are going to give that. Okay. All right. I'll put this here. Okay, so you guys, here's what it's asking you to do. And again, let's just practice this one with in long-term memory. And do give your attention, just kind of go over this with you. So what we have here now is here are the adjustments that you make, right? Here are the accounts that had a balance. And so you're going to do the adjustments and then create the adjusted trial balance. Does that sound good? And I'll put up the answers in a minute. And let's just practice what we learned and move it into long-term memory. Okay?
We just write everything down. So I think it'd be so for this one, what we want to do is we want to make a new category at the bottom for insurance expense, and then we debit that for whatever it was, $60 I think. And then we credit it for 60 on the prepaid insurance. His number is it's on revenue, and I think it's just
I'm sorry, buddy. I'm
we can make it category.
I'm going to turn off this camera so it doesn't.